Good morning and welcome to a daily outlook. This is Kim Watson speaking. What happened there then? Well, pretty much as expected in some respects. The US announced, and it was pretty widely expected that they would announce a softening, and certainly they did. They've mentioned that they would not be increasing interest rates at all this coming year at this stage, and that was pretty much priced into the market regardless. I mean, it's been priced into the market since last December. I think I certainly know I've been talking about it since earlier this year, that it looked very unlikely that any interest rates would be priced in, if at all, for this year, and the markets, financial markets, have been not pricing one in, so not a great shock there. There was a reduction in terms of the selling of the bonds, etc. that they've already got. That's going to be slowed down somewhat, but halved in certain speed. So it's a signal that they want to carry on and support the markets where possible, but they're still selling. So providing liquidity maybe for out there for some. Anyway, it's pretty much as was really, but we'll see what happens to the price action. Not a great shock that we saw the orders I mentioned yesterday taken out. You see these, there's a whole pile of orders sitting above price level there. Net buy orders, probably not a great shock that they were taken out. At the moment, there's a small amount sitting there, net buys in terms of stop positions across this sort of secondary high, maybe. At the potential for this market, well, personally, I think there's potential we'll sell, excluding the orders there. We could be selling off more. We have got some normal targets that sit below. There's the daily pivot, for example, high probability of being hit, not too far below now, but beyond that, where to? Well, could come back to this monthly pivot. If you're looking for bounces to buy into this market, well, you would generally be buying off the trend line, maybe. It's a sort of standard technical buy point, so you'd be buying off that level. If it breaks that level and starts pushing through, well, I mean, it's a matter of days and not a day, I would suggest, but it could be coming down towards that weekly pivot, maybe eventually, even if it's not this week, and maybe pushing on further. The Eurozone is in no better shape than the US. In fact, it's in worse shape. They've got no interest rates to cut or do anything with. They've already increased the amount of buying of bonds, etc. So it's in a worse shape and not seeing the sort of growth that the US has. So it will be interesting to see how the markets react over the next couple of days, but I have a bearish view on this euro. Right, so that's where we are with that. As I say, with target wise, there's the daily pivot below. Then maybe with the moving average would be key, maybe the 50 moving average sort of area. So that's where we are at the moment with the euro. With the pound, let's see if we can get the pound up. It'd be good. And look at that. That dived. It never pushed up anywhere near yesterday, where the euro went, and has dived. Of course, this Brexit negotiations causing the problems here for the pound, and we could see the pound selling off some more. It's sort of looking like there's almost a push for the no deal situation, and the Europe are saying they're getting ready for it, etc. And well, that's probably going to be, given the pound, if that was to happen, an immediate sell. But we'll see. I think there's a lot of hardball being played here, and it would probably fit Europe the best if if Parliament agreed to Theresa May's funny old deal that she's poor deal, as a lot of them describe it. But of course, the real hardliners would prefer the no deal, so they're probably not going to be agreeing to it anyway. So the pound at the moment is seeing the results of such. Okay, so already through a daily pivot, heading where to today? Well, potentially back towards that S1 for a daily S1, if not yesterday's lows, down to the S1. So potential area there. Dollar yen. Dollar yen, well, this looks like money going to safety, if you ask me. Okay, we saw some price action yesterday, and it pretty much as you would expect, the yen gaining on the US dollar there with the news. But this follow through, it would, as I say, it suggests the markets are a little bit wary at the moment, and we're seeing money running through there. So strengthening of the yen at the moment, softening of the dollar. We'll see how it develops and how it holds. If it can hold on to this daily 50 as first main touch, we'll see how it reacts. But as I say, fundamentally, again looking at the fundamentals, Japan's in no better condition than the US. So why it's strengthening can only really be maybe put down to concerns. So I would watch that. We have got the daily pivot above. If it starts breaking up, that could become a target there. But for now, with the markets in the jitters, perhaps it will continue. Aussie dollar. Well, the Aussie dollar gained yesterday from that. It could be still heading back towards that daily 200, where it is at the moment, heading towards it. Whether it makes it is another matter. Obviously, there's the big push candle, and it saw follow through. So stronger in some respects than what we would see with the likes of the euro and the pound, but whether it'll hold, we'll see. It's as I said, another one that's not fundamentally particularly strong, but we'll see. But at the moment, it's sort of, there's divergence into the sort of hourly time frames. There's a daily pivot below. Maybe that will pull back at some point. Okay, and finally the Canadian dollar. What we got here then? Canadian dollar. Well, you would have expected the Canadian dollar to strengthen significantly as well, wouldn't you? But well, it's not. It bounced straight back off. Very little movement there overall in terms of range from that news. Maybe being tarred with the same brush. In fact, it didn't get back much further than the previous lows that we saw earlier in the week there. Which again, bit of a surprise, but it's at the moment trotting back upwards here. Nothing really helping it at the moment. If it breaks that 4 hourly 50, maybe it'll be a bullish trade, which is where, if you come back to the actual weekly charts, it's still in a bullish mood, and the dailies, well, it's a bit more choppy and difficult to read there. Okay, from an intraday point of view here, looking at the hourly chart here, well, could push back towards yesterday's highs there at this rate. So that's pretty much it. I hope you have a great day. Oh, news-wise today. So sorry, after all of that, I forget forgetting, of course, what's coming out today. So on Thursday, we've had the Aussie employment data that's already come out. Which was slightly better than expected, some of it, and slightly not as good. The employment change was worse, significantly worse, but there we are. The actual unemployment figure dropped to 4.9, so we're seeing quite a lot of the key headline numbers there of the unemployment data dropping, but some of the employment change month on month isn't looking so good. Today we've got the Bank of England meeting. Well, I'll just be interested to see what they've got to say. It's widely expected everything would be left as is. So that's at 12 o'clock and 12:30. No. That's pretty much it for the day. It's, we've got the EU summit starting, of course, so there will no doubt be Brexit comments, etc., going backwards and forwards. Have an absolutely great day, and I'll speak to you in the morning. Bye for now.